Good morning, everyone, and happy Wednesday. It's Alissa, Coram, and Ken Shreve here with your market update. And on today's show, we're talking about PayPal, SPS Commerce, as well as Yeti setting up ahead of its earnings. But first, let's take a look at the major indexes. We are up across the board here. The NASDAQ up about 0.4%. Then we have the S&P 500 up about 0.5%. The Dow leading the gains today, up almost 0.7% right now. So we saw yesterday the S&P 500 closed just above the 200-day line, and now today it might be the NASDAQ's turn. Yeah, so not quite yet, but the NASDAQ is off and running again. Kind of came up very close to the 200-day moving average today, but we've got nice gains for the broad market in the early going. Clearly, there's a lot of optimism about trade talks going on with China, and President Trump saying on Tuesday that he may be a little flexible with that March 1st deadline. So growth stocks underperforming a little bit today, but they've been really going gangbusters over the past few days, so a little bit of a breather in the growth stock space, but more gains for the major stock indexes early Wednesday. That's right, and that 200-day line clearly still an area to watch. The NASDAQ, like you said, hitting a little resistance there. Yeah, and the S&P 500, like you mentioned yesterday, closed just a hair above the 200-day moving average, and it is extending gains today. So the Dow took out its 200-day line a while back. So overall market technicals look good. NASDAQ still needs to pop above that 200-day line. It's a resistance level for now, so we'll see if it can do it. That's right. Well, PayPal shares are trading up almost 1% today in above average volume, breaking out over a handle after trying to break out over a consolidation that failed, which then ended up forming the handle here. But now it's back at new highs. Yeah, trying to hold above the 95 level. So it's just a good example of how a stock can initially try to break out. And PayPal tried to clear a 93.80 entry, hit a high of 94.58, and then pulled back quite sharply. But it has regained its mojo, and it crossed that 94.68 buy point early today. Volume was heavy in the early going. We'll see if it fades as the day goes on. Sometimes that can happen, but and it is off highs right now, trading in the bottom half of its intraday range. But just a good high quality company here. Still very solid growth rates for a large cap stock. So yeah, exactly. It's a good solid name here. Yeah, and that relative strength line also something to watch. It looks like it has been heading higher in recent sessions, but it's lagging just a little bit. Lagging just a little bit, and but overall this is a good solid chart and good solid company. Yep, good name to watch. And we also want to look at SPS Commerce today, moving higher on its earnings report. A big move, over 15% in massive volume here, breaking out of a consolidation. Surprise, surprise, it's in the enterprise software group. Yeah, another enterprise software name. Pretty thin stock here. It's a small cap. I mean, you can find good opportunities in the small cap space, but we tend to really look at stocks with average daily dollar volumes in that 20 to 25 million area. This one headed into Wednesday was about 15 million, so thinly traded as well, but pretty good fundamentals here. Nice composite rating of 97, so this is just a classic breakout from a consolidation here. This is a case where the stock's open price of 103.29 looks like a reasonable entry, so looks like the stock has run a lot, but arguably still in range here. All right, and last but not least, Yeti setting up ahead of its quarterly earnings report. We have the stock building a cup with handle base after it formed an IPO base, and Yeti has only been public since last October. So what could we potentially see from Yeti heading into this report? It's already profitable. Yeah, and so the last time this company reported earnings, you can see a big volatile session when it hit a high of 21.45, and it had a really ugly reversal that day, and there were some kind of confusing elements to its earnings report. We're just kind of talking about this stock as just a pretty good technical setup ahead of earnings. Fundamentally, it's a little bit kind of a difficult company to understand. Sales growth has been decelerating. On the other hand, their premium coolers and cup holders are very popular and seeing strong demand. So we'll see what the numbers look like. This is actually not a bad candidate for a call option trade. You don't really have to shell out a lot of money. We were looking at the 20
strike price here, and it was a pretty cheap trade. So it was one of those low risk, potentially high reward trades where if you're wrong, you're not going to lose a lot of money. And but it's a breakout candidate. We'll see what the numbers look like tomorrow before the open.
Right, and this is the only the second base that the stock has formed since going public. And can you talk just a little bit about why it's important to be looking at stocks that are early in their runs and their growth stories as companies?
I mean, stocks in early stages of a run that have pretty good fundamentals. There's definitely a new going on at Yeti. They have again their premium coolers and cup holders. Really seeing strong demand. So you've got the new going on. It's a new issue, new company forming a first stage base. So this is one that could be in the early stages of a nice move here, but it's all about execution, and we'll have to see what the numbers look like this time around.
That's right. We'll have to keep an eye on it when those earnings do come out. Thanks so much for joining us, everyone. Be sure you head to investors.com throughout the trading session for all the latest stock news and analysis, and tune back in right here at the close. We will be giving you our end of day perspective with our Stock Market Today show. In the meantime, make sure you're subscribed to our notifications across social media, from Facebook to Instagram to YouTube and Twitter. Make sure you're following and subscribing for all the latest. Thanks for joining us, and we will see you back here later today.